Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the question if this move to the downside here is a wave A, C or 1, because it does count best as a 5-wave structure to the downside in an expanding diagonal. Even though expanding diagonals are not common structures, it does work best here at the moment, but we still have a question to answer. So let's run through the different scenarios, labeling this structure as a wave A, C or a wave 1, starting then with labeling it a wave 1 for further downside, because here we are looking for an impulse in a wave 1, 2, and eventually we want to see much lower prices in a wave 3. Wave 2 here ended before the 0.382 fib time, taken from the high to the low of wave 1, which is not common for a wave 2, as statistically, most commonly, wave 2 ends after the 0.382 fib time. Nonetheless, if one of the corrective structures tends to be relatively short and deep, then wave 2 has the priority over a wave 4. Wave 2 is most commonly short in time and a deep retracement, and it's definitely deep as it hit the 786, which is a common target for a wave 2. If, however, we are looking for this wave 2 to extend in time, then preferably it does not go back above this 786, because if it does, the 886 is very close, and the 886 is a rare target for a wave 2, decreasing the probabilities for a wave 3 towards the downside. If we look at this ABC, where we're counting a 5-wave diagonal, 3-wave B, and then a wave C to the downside, the most common target area for C is between 41K and 40.3K, which is also in confluence with this blue support box that we have over here, sitting between 40.9K and 41.3K. This scenario, of course, looks a lot like the impulse to the downside in a wave 1, 2, and then a 3 to the downside. The same applies here as well, that wave B is very short compared to your wave A over here. However, for a wave B, the 886 is a common target still in case price would move towards the upside. If, however, this move to the upside is only the first structure inside wave B, where we are then looking for a longer sideways range to finish wave B somewhere later, then this is a very high first retracement of a wave B. Preferably, the first corrective structure of a bigger 3-wave structure ends at the 302, 05, or maybe the golden pocket. Then we see a retracement to the downside before another move up to touch the 786 or maybe even an 886, right? But the first structure reaching the 786 has lowers the probabilities for another move going above this wave B high and still being a wave B. Lowers the probabilities of another move going above this high and then still being a wave B for another C towards the downside. If we look at this move to the downside as a wave C, then the only scenario that I could come up with here is this bigger flat scenario, where we're looking for an A, complex B, and then a wave C to the downside in an impulse. Inside this wave B, we are then looking for a double zigzag structure in a W, X, and then a wave Y. W zigzag, wave X is then a flat A, B, and then a 5-wave structure in a wave C to the downside to finish X, and then we're looking for a wave Y to the upside in a zigzag A, B, C. Now for a double zigzag, preferably price is not retracing below the 0.7, and you can see that wave X over here ended on top of then the golden pocket taken from the low to the high of W. But what you can also see, because you're a very smart viewer, is that here price went below the 0.7 Fibonacci. Clearly, this wave A over here retraced very deep, lowering the probabilities of this scenario a little bit, but this is the only scenario then where we're looking for a 3-wave structure to the upside, with this move being a wave C. Another scenario that does have the same price structure to the upside is a flat structure here, which I showed in previous videos. The only thing is that in that particular scenario, we are looking at this move to the downside here as a 3-wave structure, because in a flat we are then looking for a 3, 3, 5-wave move in a potentially a bigger W, X, Y structure. If we then look at this local bearish scenario here, we are looking for a 3-wave corrective structure to the upside in a zigzag W, X, and a zigzag Y to the upside, with the highest volume in the high, which is something that you do tend to see in corrective structures, and wave Y went to the 0.618, which is also a target for a wave Y. Now, in a very bearish scenario, we would then be looking for the beginning of a wave 3 to the downside. And at the moment, it's not yet as impulsive as we would like to see. Of course, we definitely want to see some bigger, higher volume candles coming in. Price is moving to the downside with volume increasing, but now the volume over here is in the low, meaning that we don't want to see price retrace to the 0.618 here before taking the low, because we are looking for potential 4-5s. If this is a 1, 2, 1, 2, 3, right, highest volume over here in wave 3, as that is most common, then we're looking for at least another 4 and a 5. But the maximum target for wave 4 is the 0.5 taken from the high to the low here, and the 0.618 would be an invalidation. So if price moves to the upside and hits the 0.618 here before taking the lows, it increases the probabilities to continue ranging, or at a later stage look for higher prices and maybe even above that high, depending on the structure that price is then forming in this range. Another thing that is not necessarily ideal for a bigger impulse to the downside is the beginning here, as this looks very 3-wavy on the lower time frame, 5 minute. Arguably, there might be some sort of a 1-2-1-2 stuff going on here, but this, of course, is not really ideal, as preferably we want to see a nice 5-wave structure, but that is not what we see on the lower time frames. In the more bullish scenario, we are looking at this move to the upside in a wave 1 or a wave A for then a bigger either 3-wave structure or impulse and continuation to the upside. Here we're looking then for a 1, 2, 3, 4, 5, wave 2 retracing to the 382, which is a less common target for a wave 2, has to be said, more common for a wave B, but nonetheless a target for a wave 2. And then we have over here some targets for wave B or wave 2, with the 886 being rare for 2, but still common for B, and the golden pocket and the 786 are common for both of these. In this scenario, we want to see local proof of support for then a move towards the upside. Currently, price is ranging inside this support area over here, and you can see it provides at least a little bit of support, but we're definitely looking for some more local support, because if we have a look at the CVD divergences, then yes, we do have bullish CVD divergences on a 15-minute time frame, but if you kept an eye on the lower time frames, then you've also seen that constantly we had bearish CVD divergences as price has been moving towards the downside. If I show you over here some of the pictures of price moving towards the downside, then this is what I've been posting about pretty much all day. Over here we had bearish CVD divergences earlier today, then price moving down on the 3-minute continuously, bearish CVD divergences, and then again bearish CVD divergences. So as price has been moving to the downside, we constantly see bearish CVD divergences. And if we look at the CVD over here, then you can see still that we have a lower high on price, but a higher high on the yellow CVD. So it is important for more upside to break this pattern of the bearish CVD divergences to hit that 0.618 that I just mentioned for the probabilities to turn around and look for more upside. And that is then also what I've written down in the probabilities over here. It's quite a little bit of text, but I try to explain it nicely, where on the low time frame, generally, right, when zooming out and looking at this range, generally we are still looking for lower prices to come, right, either in that flat scenario or eventually a direct move towards the downside. However, at the moment I'm pretty neutral, and I would prefer to look at the micro scenario, where on the micro, which means the very local price action here, on the micro we have a move from the local high that looks a little bit 3-wavy, as I've shown you as well over here. On the lower time frame, the beginning of this move to the downside looks a bit 3-wavy. Also, the volume here towards the downside is currently inside the low. So for an impulse, we at least want to see another 4 and 5 before hitting potential 618s, which is over here at 42,847. If price moves up here and hits that 618, it does lower the probabilities for a bigger move towards the downside, increases the probabilities to keep ranging or move towards the upside. And we want to invalidate the bearish CVD divergences if we are looking for price to move up or continue ranging here, maybe over the weekend. And then you can see I wrote a little bit of an explanation, which I tend to do sometimes, right? That if not entered at the upper target box over here, then I would be neutral here and observe the reaction if price takes the local lows, meaning the low over here at 42,200, basically these lows here, or moves up to hit the 0.618 first, and then I would take it from there. If the 0.618 is hit, I would observe the reaction, keep an eye on bearish CVDs. Maybe they are then invalidated as well, especially if price can move above this high here at 42.9k, which is pretty much around the 618. So that's an important level. That's this little order block candle here, right? And so far, this move to the downside, it doesn't look too impulsive to the downside just yet. It has to break the bearish CVD divergences, of course, that we have to the downside constantly with every retracement to turn around the probabilities. Doing that changes probabilities back to neutral/upside, especially if price can range between 43.8k and 41.5k for a longer period of time. Many are looking for a bigger wave C towards the downside, right? Where they're looking for a wave 1, 2, and then a bigger wave 3 to the downside. And then I wrote over here, it would be nice to go the opposite way and create a fake high over here at about 45 something K before a significant move towards the downside. But that is just a personal thought, really. That has nothing to do with necessarily the probabilities, as locally we are looking for the 0.618 or the low to be taken, and then we take it from there. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.